Hello dosto, welcome to Site Tech YouTube channel and today my topic is how to avoid paying taxes in 2025. Before I start my video, how to avoid paying tax in tax avoidance. Finding a legal way to reduce your taxes if the offense minister permitted as tax evasions, not paying tax at all. Tax evasion conceals financial information from tax authorities, which can result in significant fines, penalties, and damages to a business reputations and growth. Instead of avoiding paying taxes, you should focus on finding legal and ethical way to reduce them. Here are simple way to avoid paying taxes legally. Click on the link to navigate to specific sections. 401k contributions to IRA. Open a health savings account. Itemized deductions. Claim tax credits. Charitable donations. Flexible spending accounts. FSA. Invest in municipal bonds. School enrollments. Self employed. Independent contractor deductions. Seek professional advice. 401k contributions to IRA. Contributing on an individual's retirement account IRA can reduce your annual taxable income. While your contributions can't exceed to total incomes earned or maximum early contributions in a taxable year, it is 100% deductible. The retirement plans must satisfy IRS requirement and includes but are not limited to Roth IRA, Simples IRA, Solo 401k, Cox plans. You are probably asking, how much can I contribute to my 401k each year? Usually in October or November, the Internal Revenue Service IRS reviews the contributions limit for 401k plans, individuals, retirement accounts, IRAs, and other requirements savings vehicles. Employees can contribute up to 23,000 to their 401k plans in 2025. Additionally, thus adds 50 or over make a catch-up contributions of 7,500, bringing their total contributions limit to 30,500. The general limits on total employer and employee contributions for 2025 is 70,000. Can which catch up contributions for thus aged 50 and over. The limit is 77,500. Open a health saving account. Freelancer or self-employed individuals covered by a high deductible health plan HDHP are eligible for a health saving accounts HSA. You can contribute to a health saving accounts to lower taxable income if you have an eligible high deductibles medical plan. Contributions to these accounts are tax deductible and can be withdrawn tax free. For qualified medical expenses. Furthermore, balance at the end of the year can roll over indefinitely. Itemized deductions. Most people commonly use the standard deductions because of its simplicity. However, itemized deductions allow you to make a detailed list of all payments or contributions that are deductible. Payments for mortgage, interest, property taxes, medical expenses, and local and state taxes fall under tax deductibles. Itemizing these payments qualifies you for tax deductions subtract from your adjusted gross income, reducing your taxable income. Claim tax credits. Tax credits reduce the tax you owe to the IRS or other tax authorities with the possibility of a refund. For the 2025 tax year, the maximum earned income tax credit EITC amounts is 8,046 for qualifying taxpayers with three or more qualifying children. This is an increase from 7,830 for tax year 2024. The maximum amounts available for qualifying taxpayers is as follows. Thus, with two eligible children, the amount will be 7,152, an increase from 6,960 in 2024. Thus, with one qualifying child, the amounts will be 4,328, up from 4,213 in 2024. For thus, with no qualifying children, the amount will be 629, rising from 632 in 2024. 2025 Earned Income Tax Credit EITC. The Earned Income Tax Credit (EITC) is calculated using a formula considering income and family size. The credit forms limit range from 19,104 for single taxpayers with no children to 68,675 for married couple filing jointly. The IRS website breaks down all the credits you may be eligible for as a business or an individual's. Charitable donations. You can claim charitable contributions as itemized deductions on schedule of IRS form 1040 under gifts to charity. Charitable contributions made with payroll deductions, checks, cash, and donation of goods and clothing are all deductible. For deductions eligibility, it is essential to have tax receipts for donations made online to a charity or even voluntary expenses. Flexible spending account (FSA). A flexible spending account is a pre-tax payroll deductions by an employer to fund an account for employee expenses such as insurance, copays, or over-the-counter medications. There are two types of FSAs. Medical FSA. A medical FSA allows employees to set aside pre-tax dollars to pay for qualified medical expenses such as co-pays, prescriptions, drugs, and over-the-counter reductions. Dependents Care FSA. Dependents Care FSA allows employees to set aside pre-tax dollar to pay for qualified dependents car expenses such as child care or adult daycare. In both cases, they are limited to how much you can deposit, and money may be forfeit is not used by the end of the year. Invest in municipal bond. Municipal bonds are debt securities issued by state and local governments or government agencies to finance public projects such as infrastructures, schools, and hospitals. Municipal bonds are considered relatively safe investments such as the issuing government's entity with low default risk back at them. Buying a municipal bonds essentially exempts you from paying tax or the total amount of your original investment plus interest is repaid once the bond reaches its maturity date. School enrollments. Another way to avoid paying tax is to get credit for deductions. Education enrollments. The US government offers credit and deductions to return to schools online or in your community. You can take advantage of the education tax credit through the Americans Opportunity Tax Credit, which offers up to $2,500 credit paid during the taxable year per student. The credit is available for the first 4 years of higher education and can be used to cover tuition fees and course materials. You could be also consider the Lifetime Learning Credit, which offers up to 2000 of tuition fees and course materials. The credits can be claimed once per year and is available for an unlimited number of years, making it a valuable option for thus pursuing higher education or improving job skills. Self-employed, independents, contractors, deductions. You can claim tax deductions as a self-employed, independent, contractor, or freelancer. The self-employed tax rate remains at 15.3 which includes 12.4% for social security, all old age survivors disability insurance, and 2.9% for Medicare hospital insurance. Seek professional advice. Working with a tax expert or financial advisors can help your business identify tax savings strategies, can comply with all relevant laws and regulations. A professional can help a business understand its options and make informed decisions about how to avoid paying taxes. Final thoughts. Overall, your business can use many strategies to maximize the cost of tax and improve profitability. The goals you should not be avoid taxes but reduce the amounts you pay to the government is an accounting year. It is critical to comply with all relevant tax laws and regulations and seeks professionals advice to minimize the tax burden and improve financial performance. See more next video. Take care. Bye.